morning, traders. Welcome back to the Everyday Growth Advisors live stream, the pre-market rundown. I hope you guys are having a good morning. Well, hardly a good morning. Everything is red. It is crazy, right? We'll be going through a couple of things today, what a day to have a webinar that teaches you how to hedge. So I'll be going through how to hedge for the first half. I'll pretty much do the pre-market breakdown first. We'll switch to the webinar really quickly after that. Shouldn't take more than 15-20 minutes or so. And then we will pop into the new ticker of the week, which is SBUX, which is surprisingly holding well up in this market. So we'll go have a look at everything, and then we will close out with whatever time we have left to do any tickers that you have. So it should be interesting. Remember that if you're here, this is your first time, make sure you smash the like button, and also subscribe if you haven't. We do this Mondays to Fridays. Tuesdays and Thursdays are usually webinars, and it should be a interesting morning today. Markets are extremely red. We'll see if we can make a bounce over here. This was the previous lows after the sell-off last week, and see if we can actually bounce back from this level over here. That would be a key level for a recapture of the bulls, and if not, I'll run through what are the key levels after this on SPX as well, so we can have a look at them. Okay, so let's do the pre-market rundown first, and look at what's going on with the news over here. We have a lot of interesting stuff being mentioned with the Nasdaq futures tumbling, tech sell-off set to resume, yada yada. Drug makers pledge to avoid safety shortcuts on COVID-19. So there's a little bit of jitters in the air. Also, Malaysia saying the U.S. saying something about further hindering the China's internet decoupling. Which, it's going to kind of cause additional pressures to the market, right? You have palm oils, okay, Japan pressing ahead with Olympics, okay, and interesting. Not much on Bloomberg. Kind of bearish news, right? Let's see here, Wall Street Journal. Looking at what we have here, we have mortgage market booms even as virus hits economy. That's very interesting if you think about it. But I think there are correlations here to be made. That will take an entire different stream to explain and go through. U.S. stock futures decline following a tech slide here. So Tesla down big time here pre-market on just general risk-off mentality, and also the fact that it didn't get included in the S&P 500. Also, along with Tesla, of course, Amazon, Apple, Microsoft all getting taken down as the biggest weights there. So no surprise. Looks like an interesting open here, but I'm actually curious to see, because I feel like this may be just another elaborate bear trap. Okay, and I'm not convinced yet that this is another sell-off just as yet. We need some key levels to be breached in order to get that confirmation. So as of right now, I am fine with holding the idea that we will be seeing potential upside here after we can shake out some weak hands. Okay. Also, oil prices dropping on faltering recovery in demand. This was interesting because I actually was doing analysis on this in my master's program, and it seems to me like the more that oil prices drop here, I'm more and more tempted to pick up some solid fundamental-based businesses that deal with oil, ExxonMobil, Occidental. Those are all things that I'm looking at. I may choose to add some or open up positions in this if we get a deep sell-off again. Remember, when crisis is in front of us, it presents a opportunity. And then apart from that, stock investors stay bearish in apartments. Okay, blah blah blah. And so let's look at the pre-market movers here. Interesting stuff. Nikola up 28% here. I think it was up earlier even more on news that GM was going to acquire 11% stake in its business to partner on pickup trucks. Tesla down 15%. Jesus. 4 million shares traded pre-market, and 7 million shares of Nikola traded pre-market. NIO falling on the news as a sympathy against Tesla, and Apple down a whole 5%. Boy, are our calls going to hurt today. So for people who don't know, on Friday, I took a calculated bet to the upside, opening up all these positions here. So these are all going to be hurting today, but it's fine because look at the expiry dates. We are not in any worry whatsoever, right? We have long expiry dates. This is the reason why we go 50 to 80 days out. We take long swings so that even if something like this happens, we are still okay to the upside. So I have Datadog, Microsoft, Apple, Facebook, Boeing. These are all probably going to hurt pretty bad today, but it doesn't matter, right? It doesn't matter. Why? If we get a deeper sell-off, that gives me another opportunity to average down on these. So today is a day where I feel out of sync, and it's okay to not trade on days like this, okay? In terms of notable news, we don't have much things over here. Just general low impact news here. 6-month, 3-month auction bills would be interesting to see how those go and see the risk appetite of risk-free assets there, and continue on with the pre-market session here. So we have GM up about 9% on news with Nikola. Space up about 2% here. Etsy up about 1.79%. Tesla, once again, Moderna, Fastly, all down. Square also down. Nvidia also down. DocuSign, bunch of companies, guys. We have a pretty big corrective wave here. So nothing too crazy, but it kind of makes sense with how much we've been rallying so far. I've been saying for a long time, if you went back and you watched last Tuesday's live stream, we actually covered the potential tech sell-off. And if you go look at my playlist here, go have a look at these playlists. You'll find a video from last week over here. On I want to say it was how to manage positions. This is the one you should watch if you want to cover why we took the hedge position and stuff like that. So watch these videos. I put together these videos, webinars as well. You can click on the playlist. The EJ growth webinars are extremely helpful, and I'll continue to add to these as we go along. So today we'll be doing another one on how to hedge, and that will go to this playlist as well. So if you want to go have a look at that on a different day, feel free to do that. Make sure you guys are smashing the like button. I hope you guys are having a good morning. Welcome in. Good morning. Good morning. Good morning. Ready for this bearish market analysis? Yeah. Let's get that done. I want to see. Let's see. We can get to 100 likes today. I really hope that we can get to 100 likes. That would be a nice aim for me personally, so that this stream can be shared with other people. Good morning. Interesting morning. Exactly. What up, T? What up, Jacob? Hey, Jared. How are you doing, man? Welcome back, Jacob. How are you doing? Morning. Good morning. This week will be great. We just have to be smart. That's absolutely true. Let's get these nuggets. I'm personally excited to be a new member. Absolutely. Someone vacuuming. Oh yeah, that was somebody from my neighbor, pretty much. I think strike might be a bit too high. Okay, we'll have a look at those later. Okay, now, so looking at this technical analysis here with the SPY, Nasdaq, Dow Jones Industrial, we're going to do a breakdown here just to show you guys what I'm seeing here. Now, if you look at the way that we've been moving, so on last week's live stream, I mentioned a couple of times that this was a key level to be taken out. We broke that level, and now we are here, and now we have broken that level. The 61.8 retracement, this was a golden bounce with the golden pocket here with Fibonacci. This remains a very clear contest zone, and you can see the market's going to probably come down to test this again. Now, if we do break this zone, this is a key level today. If we do take out this zone, then bears are going to be in control of the market and push this all the way down, I see, to the 38.2 retracement. That should be the next a key support level, which is the old resistance here. It's going to become the new support. So this old little resistance here is going to turn into the new support here. So this will be the key level to watch today on SPX. SPX would be 3291-ish. That would be the level to watch. I would say 329 on SPY or 328, somewhere around there. That would be the key level. But this level is a very strong level. So we'll see. If we can break this level, that means there is going to be future downside to this level here. That's on SPY right there. Now on Nasdaq, the story is a little different. And by the way, this correction is quite normal still, by the way, guys. Just so you know, remember, we have been up here for a long time. I said we need to come down, touch these moving averages at least at the very bare minimum, right? So coming down here is not too bad. I hope that we don't actually go, too crazy and switch to the other side. But you never know with this market momentum, okay? Now, what's important today is if we close below the 200 moving average, which is this blue line here, that may signal further downside in the days to come. So what we would really hope is a sell off, a bounce, and then a close above this moving average here. That would be ideal for today, but we don't know what's about to happen. So we'll take it as it comes, okay? Nothing to panic yet, nothing crazy. But if you want to hedge your positions, I think this is hardly the time to do it. The time to hedge was last week, and so this today poses a very, sticky situation. Hedging here is going to be very expensive at market open, and so you're going to be buying overly priced insurance contracts, which I don't find very interesting. Now, if you want to hedge, I'm going to show you how to do it in the webinar, which is going to be in about 5-10 minutes, right after I finish this this breakdown here. So now let's look at the Nasdaq here. So the Nasdaq is showing signs of a double bottom here, with a nice little bounce on the 50 retracement here. We'll see if we'll continue downward here, or if we're gonna continue all the way to the 38.2. This would be the key level, or the 23.6. I see the 38.2 as the key level for a bounce, if anything. I think this should be the key level. You can see this coincides with the old resistance over here, and then also support. This is a key dual zone here, dual zone, which means it is both where bears and bulls are battling it out. So this is going to be a key golden pocket here to kind of test. Now the other interesting thing is, look at where Nasdaq is sitting on this channel, which I've drawn in for months now. I've not changed these lines at all, and we came to test the channel bottom and we bought back up. And now we came back to test this bottom again, and we bought back, and we're showing signs of buying up again. So we have to see if we can hold this momentum. If the bearish pressure really continues here, we will break below this channel. We will break below this channel, and then temporarily be in a bearish phase down to 38.2. If we break the 38.2, we'll go down to 23.6, and then yada yada, right? But I see possibly go down 38.2, bounce back up into the channel is highly possible. That's what usually happens, because there is a wave of irrationality where retail traders come in, or a bunch of other traders come in and try to push the prices down. Market makers even add the fuel to the fire, provide liquidity for these, and enable traders to sell at nice tight spreads. So usually causes a wave down out of some pressure, okay? Especially people who are shorting into the market right now. I don't know. I just don't feel comfortable selling anything over here. So definitely doesn't look like a good time. Okay. Good morning. Good morning. Welcome in. Okay. Now the interesting thing here is, look at the Dow Jones Industrial Average and how it is performing versus the rest of them, right? Just look at the difference, the sheer difference here. Barely being affected, and that's also because of the fact that the Dow is not in the same position to be heavy tech or heavy with the stocks that are selling off massively, right? These are the gems, the blue chip companies, and we have barely even tested the 200 moving average. Last week we came down to test this over here, and that was the interesting thing. Let's look at the VIX now and see what's going on with the VIX, because that is another one, right? So the VIX back up this morning again, showing signs of another move up, but looks like a very interesting development here. I personally don't like this, and we can see a big bearish engulfing candle that's kind of overshadowing these two bullish candles. So almost looks like a hot dog if you think about it. But to be honest, I don't think the VIX is going to try and go crazy here. Of course, if we see that indeed that sell-off that I'm talking about on SPY, and we go to 61.8 retracement here, which is the February retracement to this key level here, then we may see VIX kind of spike. But if we don't, and we hold this position here, I would say this is a really great time when everyone is having fear to pick up some long-term leaps on contracts. This is a good way to take a starter position. I think taking starter, like how I did on Friday, I took starter positions when we were up here. This is exactly where I took my starter positions. And then the market rallied a little bit, right? That was a key level. So this was one level that I added. If we go down here and we bounce, I will add some more, a little bit more here. And then if we go down here again, I'll add some more over here. So then kind of average in your positions as you go along, right? You never want to take everything at one time because you don't want to overexpose yourself to the market here. So this is the way that I'm looking at it. Now, personally, today I am not going to be trading anything. Why? Because I personally feel out of sync. And that happens, guys. It happens, okay? Generally speaking, if you are feeling out of sync with the market, you don't need to trade it, okay? Now, I'm not saying that you say, oh, cash is a position here. What I'm saying is sometimes things don't make sense. And when the market's irrational, markets can remain irrational for an extended period of time, longer than you can remain solvent. So you got to remember that when the market's behaving like this and you have long positions and you already closed out your hedges, there's no point to be greedy, okay? No point to be greedy. Remember, the name of the game is not to be greedy here, all right? And take hedges again, right? What if you take those hedges and then the market goes whoop, right? So then what happens? Then you lose your money on your hedges as well. So there's no point. Yeah, there's insurance for your downside, but what I see as a downside over here, where we were, this risk to reward ratio to where we sold our hedges at, which was here, is nowhere compared to buying hedges here. And then, do you see what I'm saying over here? Like, look at the distance from here to here, right? Just logic will tell you what I'm talking about. And the distance from here to here, right? The risk to reward ratio doesn't present itself to buy hedges here, all right? But there is a way to protect your downside if you really want to, okay? And I'm about to show that to you right now. So we'll kind of briefly, I'm going to see what happens here. Oh, wow. Thank you so much, man. Thank you for a donation. I really appreciate that. Really think... wow, I'm still in shock. Thank you for the $50 Canadian dollar donation. I really do appreciate it. So looking at what we're talking about here, okay. And by the way, guys, welcome into the stream. I hope you guys are having a great morning. Make sure you smash the like button. You know how we do it here. Really, all I want you to, and would appreciate is you just hitting the like button, because that allows the stream to be shared with other YouTubers, and they will get the knowledge that you're getting right now. And that's what the channel is about. It's spreading good knowledge, positivity, vibes. That is really important to me. Okay, so what we're going to do right now is kind of take a break here with the market breakdown, and we're going to do the hedging webinar, okay, for a very quick little time. So probably about 20 minutes here, and I'm going to tell you what are the various strategies that you can think about when you're hedging. Okay, now this is supposed to be a webinar on how to hedge. Okay, so I think many people are confused on what a hedge is, first of all, and what its function is. How do you buy a hedge in a market that's functioning like this? Well, first of all, you have to understand what is a hedge. Okay, what is a hedge? So a hedge is like an insurance contract that you buy. Okay, think of it as insurance. And what do you buy for? What is the most common thing you buy insurance for? Like, it's like a car, right? For example, you drive a car, and this is my very cool Cybertruck, right? Okay, my very cool Cybertruck that has only 2 wheels, because you're looking at it from the side angle. Okay, this Cybertruck needs insurance in order to perform, right? Why? Every day you go in, if you get into an accident, right? You hit a wall or whatever, right? You need insurance against this car. Well, the same thing goes for your portfolio, okay? Your portfolio needs insurance. Now, the thing is that the time to insure was not now. It was when we were at the market top, right? You don't buy hedges all the time. You buy hedges when you need them. Now, you buy hedges when you are in a moment of either extreme euphoria, right, which was up here, which is if you were part of the stream and you were here from last week, we literally bought hedges before the drop, right? We bought hedges up here, okay? I said, guys, I'm going to buy QQQ puts, and then what happened 2 days later? If you look through members picks here, so I called those out, and our puts were up big time, right? So right before the drop here, I just want to show you here, if you're not part of Option Swing and you don't know about a community, this is one of the best communities you can ever be a part of. We have, a great community here where we, help each other out. So where was it? So there we go. So QQQ puts $300, and we bought it for October against any potential drops, and this was right at the market top. Okay, We bought those puts in anticipation as a hedge. Why? Because the market was in euphoria mode. And I was saying for a long time, guys, we can keep chugging along, but right here is where I would, we have that key level 161.8 fib level here. We are kind of seeing a topping out pattern. And then the most important thing for me was here's what the kicker was. It was a candlestick formation, which was bearish. Okay, we had a doji, and then after the doji, we had a bearish engulfing candle. Okay, and this bearish engulfing candle shows that we are ready for a price reversal here. Now, the moment I saw this candle, which is the hammer, right, that is where we took our hedges. Okay, and right after that, we did the big drop, which happened last week, right? And then where did I close my hedges out? I closed my hedges somewhere here, and I took profits over the weekend because I didn't want to have to hold those over the weekend. Now, obviously, granted, I should have held those hedges, but you know what? It's okay. We made $6,000 on those hedges, and $6,000 is a big amount of money. Okay, I'm not trying to be greedy, right? So those hedges were later up big time, $600 within the end of the day, and then after I think it was up much more at some point, $3,000, and then I finally closed them out at about $6,000 in profit last week. So then what I did was I took all the profits from my hedges and put them into some long bullish positions over the weekend. Okay, and now obviously the market opens up red here. There's not much I can do about it, but how do I handle this situation, right? Well, I have long positions, right? Is it really going to matter to me? Not really. Okay, so what is it that you can do? Well, you have a portfolio, and it depends what do you decide? First of all, how do you hedge, right? First of all, you have to decide, what does your portfolio consist of? Okay, you could be long tech only. You could be long S&P 500, non-tech, right? Non-tech, okay. And then you could be also long Dow Jones, right? You could be long Dow Jones Industrial Average, okay. You could be a mixture of all three, okay. Now let's say your portfolio is 100% tech. Well, what do you hedge against? Tech. The best thing to hedge against tech is QQQ. Okay, that's your ETF that tracks the Nasdaq. Okay, now if you're at 100% in S&P 500, what do you hedge with? You hedge with the VIX, right? Because the VIX is a direct correlated hedge against your S&P 500 positions. Okay, and then if you're in a 100% Dow Jones Industrial portfolio, then you can just buy DJI puts, right? Or actually, it's DIA. Sorry, DIA, right? I'm pretty sure that's the ETF for it. So let me just make sure that I'm telling you the right thing here. Yeah, it's DIA, right? So this is the kind of the ETF, right? Okay. So those are the three things that you'll be using. Now, it depends on what is your position sizing, right? Let's say you are 100%, then you would go full QQQ puts. If you're 100% S&P, then you go full VIX puts, right? But then how much of this should you hedge? So the general idea is you would hedge about 10% of your open positions. So let us say that, for example, my portfolio had open positions of $10,000, right? Well, my hedges would consist of about $1,000. And if I was all long tech, then what you would do is use it to buy $1,000 worth of QQQ puts. Now, what kind of a expiry do you take? What kind of a strike do you take? Those are generally up to you. Okay, those are generally up to you, how you do your analysis and all that, right? But generally, I like to go about 2 strikes down, right? 2 strikes out. Okay, and also I like to go 50 days or a minimum. Okay, it has to be a minimum of 30 days. Minimum 30 days out. Okay, now in a situation where I want to change up what my portfolio is, then I would go for weekly contracts, weekly hedges. Okay, and I've mentioned this before. I generally, sometimes what I'll do is, if my options portfolio is changing rapidly, then 1 week I may want to hedge against tech, The next week, I may want to hedge against S&P. And the week after, I may want to hedge against DIA, depending on how many things my portfolio consists of. So you gotta do the math, right? Let's say your portfolio consists of 10K, and then 3K of it is in tech, 3K of it is in S&P 500, and 3K of it is in 4K of it is in Dow Jones, 4 or 3K, whatever, right? Then you need to split out your hedges between all of these, okay? So you need to assign those weights based on your portfolio composition. You can't just do a one size fits all or a glove approach, because it will not always work, okay? So I like to take a tailored approach for each portfolio and say, okay, if my portfolio has 10K worth of this, then this is the kind of method that I'm going to use, okay? So this is how you can go about hedging your portfolio, okay? Now I'm sure that you guys have a whole bunch of questions, so I'm going to have a look at some of these on the chat and see what you guys have here for me, okay? Smash the like button. What do you think about, okay, $300 to 6,000. Yeah, that was a good one. If SPX and VXX fall more, do you suggest buying VXX puts and SPY calls, since there's a great risk to reward? See, now, Daniel, that's a great analysis, right? And I like this. I like this one. So, in fact, what Daniel is saying here, and I like this, right? I like this. So, think about it this way. Now that you know the market's selling off, you know the sell-off can't go forever too, but do you try to catch it? That's one thing, right? Now, the question is, when do you buy the upside? Like, when do you buy the reversal, right? And then you can buy VXX puts, or you could buy SPY calls, right? But when do you do this? Well, the answer is you can't do it until you have 2 consecutive waves of pretty much bullishness, right? So what you would be waiting for here is a wave up, a wave down, a wave down. And on this wave, as it's going up, this is where you would start. So you need a confirmation. You need this low higher, and then this low higher. You need 2 consecutive higher lows and 2 consecutive higher highs, okay, to confirm that the trend is reversing. Then you enter your call positions over here, okay? And I agree that the risk to reward ratio here is much nicer, right? The risk to reward ratio here is super good, right? Because now you can play the upside instead of playing the downside. The downside is super expensive. You don't want those, right? You don't want to buy no puts now because they're super expensive. So stop trying to think that today you're going to get into the market and buy puts. Why? Because it's too late. You're too late to the market's bearish momentum now, right? You've already missed out on all of this, right? You've missed out on all of it. So what are you trying to really catch over here? You're trying to catch this, okay? Or you're trying to catch this, okay? So what are you really catching? You're catching this, right? You're catching this. And in order to catch this, what are you risking? You're risking all of this. Granted, you could have a stop loss up here or something. But then what does that show you? This is not a good risk to reward ratio, right? This is the risk you take on, and this is the reward you take on, right? So your risk to reward ratio is messed up here. So you shouldn't take the downside trade here. But what Daniel's saying is, okay, let's wait for the reversal, right? Let's wait for the reversal up here. And once we get a confirmation of the reversal on a 15-minute candle, right? That's a strong reversal, right? And it's going to take at least a day or two to get that confirmation. So you got to wait it out, right? Wait for the wave, and then wait for another wave. And then on that wave up, you start taking your positions to the upside, right? You see 2 consecutive highs, right? And we are going upward. Then, okay, you take this position to the upside, okay? So that's something that you gotta take into account, okay? And how do you choose money contracts to buy for puts? Well, how do you choose money contracts to buy for puts? What does that mean? Do we let our hedges expire worthless? Okay, so here's a good question. All right, so this is a good one. Okay, now there are two cases. The first case, you let them expire worthless when they are weeklies. If you're hedging your portfolio on a weekly basis, okay, you let them expire worthless. Okay, but if for some reason you're holding a month out contract, okay, and for example, your contract was like mine, which was up like almost 70%, right? Almost 70%, then you would be stupid not to take these profits, right? So it also depends on how much profits you have and when your contracts are expiring, because your weekly contracts will decay much faster, right? So if they don't work in your favor, they're going to decay anyway. So you might as well hold these and let them expire worthless in the case like a true insurance contract. However, if you're taking a hedge for a month out and you're expecting a market downturn in the future, that's a very difficult situation. But if your contracts are up 70%, are you going to let those profits just stay there? No. What you should do is either set a stop loss or take a take profit, right? For me specifically, what I did was I set a stop loss and then I just let it close out. I just let it close out for me, okay? So that's what I did. And that was a good question, by the way. Thank you for that. In general, when should you consider cutting your far out expiry calls? Well, if my far out expiry calls are, first of all, generally speaking, I wouldn't cut them. I would just average down. That's what I would do. How many? I meant how many? How do you choose how many contracts to buy for puts? I just explained. I just explained it. So you go off how much your open positions are, right? Let's say you have $10,000 worth of open positions. Then you need to insure about 10 to 20% of this. 10 to 20%. Now, if you're conservative, 10%, like me. If you are like super risky, then 20%. Okay? And so that will either give you 1 to 2K. And you got to break that down per price of contract. So depending on the premium that you pay. If each contract you pay for is $500 or $5, right, per contract, then how many can you take? It's either 2 or 4, right? It's either 2 or 4 because you can get 2 of them for 1K or 4 of them for 2K. So that's how many contracts if you're asking me. Okay. Let's see here. Let me close this out. I feel like something's causing the lag here. Really learned a lot. Thank you. Absolutely. In general, what should you consider? Okay, I answered this one. All in silver. This is for the bird. Silver will outperform all your nonsense. This is I don't disagree with this. I've been talking about silver and gold outperforming for a long time, but and it's actually approaching the oh, wait a minute. Well, silver is actually approaching the levels that I would consider buying it. But let's see. I wanted to kind of go down to this level, the 200 moving average. That's where I would really like to buy it here. So maybe it might come down here within the next 2 days. I may consider buying some silver calls. I do like silver. By averaging down, you mean just add another call contract that becomes cheaper as the price contract? Yes, exactly. It just means you just keep buying. You just buy the same contract. Like for example, look. Like for example, my open positions are this right now, right? So let's say I bought all these contracts at a certain price, right? And then the market drops. The market drops some more, right? Well, what do? I just buy more of these said contracts because they're cheaper now. I still believe in these positions. Do you think that Microsoft, will not be going back to, this level within a month or two, right? We have a whole month out, right, for this contract. That's quite a bit of time, right? We have almost a month and a week for these Microsoft calls. And then Apple, right? Do you not think that Apple will go to 120 by November or Facebook will go to 340? Well, there are bets that you're making, right? And I have some bets on Boeing as well for a reversal as well. So these are all assumptions and bets you're making based on risk to reward ratio. And that's just how you do things, okay? Today is a rewatch class kind of day. Thank you very much. Yep, you could definitely rewatch this webinar. It's going to be up in about an hour or so. If you have a small amount in open positions and near the month hedges are too much, should you go for out the money on hedges to match your 10%? I don't recommend that. I say 2 strikes is what you take. And then if you want, just move the strike expiry closer to yours if you really want to hedge. That's the way I would do it. Listen, like many of you guys use the wrong method to capitalize on movement. So majority of you guys go with the out the moneyness. Let's say you can't afford something. What you do is you compromise on the out the moneyness. You keep going further out the money, either this way or this way, right? Because you're like, oh, this is too expensive. Oh, this is too expensive. And then you just keep going out the money and out the money and out the money. But you don't realize one thing. The further you go out the money, right, you lose intrinsic value. Okay, so your contract doesn't have any intrinsic value. All right, you're only betting on extrinsic value. And as time goes towards your expiry, this extrinsic value and intrinsic value combination drops off, and that's how your contracts die. Okay, so you would rather be closer to the strike, all right, and have a better opportunity to hit that target then, and what you would do is move your goalpost for your expiry closer, compromise on the time here, but actually hit the strike, because then you actually have a chance of having intrinsic value. Okay, intrinsic value is what drives the premium price. Okay, so I wouldn't consider going so out the money. That's what I'm saying. Okay, great. I think I answered some of these questions here. Let's see here. Good morning. Good morning. Good morning, newbie here. Looking forward to SPX analysis. Welcome in. Would you unload SoftBank? Is it SoftBank? SFBY. Wait, what's that? Is it SFBY? Is it SoftBank? Yeah, I think you meant SoftBank, right? Where is it trading at? I don't even know. I don't know, man. I kind of like SoftBank long term. Like if you buy and hold these shares, I feel like they're a decent thing to hold because they're high leverage. Okay. So, new ticker Monday. Today is Starbucks, and thank you all for choosing the ticker last Friday. Appreciate that very much. So I just wanted to go through a couple of things here. Interesting thing here with Starbucks technicals I was going through earlier. If you look at it on the 4-hour chart here, looks like it's been a nice little uptrend here. And you can see that it's broken out of this resistance here and now starting to come down here. Pre-market, it's not even affected that much by this drop, to be honest. Looks very bullish now. I was trying to figure out why, and I think there's just a lot of interesting information about how Starbucks is improving its presence within China and Asian countries, and then also some news about Impossible Foods and their Impossible Burger. Impossible items being sold in Starbucks right now, and there's apparently some drive for some of their products. Okay, now I was looking at the revenues, and it's not looking very great so far. For the past 2 quarters since COVID, Starbucks has been in a negative revenue loss, which makes sense. Obviously, their business is seeing minus 50% in foot traffic, as their 10Q says here. So I was reading through the 10Q, got pretty far, about halfway here. Lots of stuff being mentioned here by management. So I just wanted to go through the couple important things that I found, so that you don't have to do it. That's the beauty of coming to this live stream. I kind of find the little bits of nuggets for you, so you don't have to go and find them on your own. Okay. So where is it? I want to say not this one. There we go. Okay, so they temporarily closed significant number of our company-operated stores, and they're gradually reopening stores in China in late second fiscal quarter, and they have third quarter modified operations to meet public health guidelines and evolving customer behaviors and expectations. Now, comparable stores for American sales segment declined 41% during the third quarter of fiscal 2020. Due to temporary store closures, reduced customer traffic, and limitations of modified operations. What else? Here was the fact that, okay, we ignore all of this. This is not important. So, comparable stores international segment is down 37%. It's kind of weird because I still see Starbucks hella packed here. But let's see, maybe things improve, right? Now, comparable sales for stores. So you can see them here, consolidated. They are seeing 40% sales growth down, and transactions are 51% down, as I was saying earlier. And compared to June, 3 quarters ended, you can see those numbers, how they change quite drastically. It's almost double the loss. Results of operations here, showing losses here as well. Total revenues down about 2.6 billion. So this is tough time for Starbucks. Okay, tough time. And then the stock is rallying, so we're gonna have to do intrinsic valuation of the stock on Wednesday, which will be tomorrow. So come back for tomorrow's live stream to see what is the intrinsic valuation of the stock. We will be covering that tomorrow. We'll do a valuation, fundamental valuation. And if you're here right now and you're enjoying the stream so far, I really hope that you would give this stream a like. That's really important to me. If you can, I'd really appreciate it. Smash the like button so that people can get exposed to this stream. Looking at the 10Q further here, we see total net revenues for the first 3 quarters decreased about 2.4 billion, which is a lot of money. Okay. What was interesting though was what I was looking at was their credit lines, and they're actually pretty healthy that way. So I want to go actually have a look at this. Go look at their financial health here through Morningstar. Not to kind of give away anything on the fundamental analysis here, but I just want to go take a quick peek at how they are doing health-wise, right? And remember, if you want to do a quick peek of any company's financials, Morningstar has a pretty good summary right here, right? So this is what I was looking at. The interest coverage here is about 5, which is great. Above 3 is usually pretty healthy. And the only thing that matters here, which I kind of get bothered by, is their quick and current ratios, which are less than 1, which means they don't have sufficient assets to cover their debts and liabilities. Okay, you can see that the past 3 years, they've kind of been struggling a little bit. They're struggling to grow revenues. Net income kind of spiked and then dropped, and then also their total assets have been dropping, while total liabilities have been kind of increasing here, which is causing the net decrease in ratio for assets over liabilities, right? Not also that their cash flow from operations have been dropping. So this company is actually facing some significant headwinds. Okay, significant headwinds. And I really don't feel comfortable investing in a stock like this right now. What I actually think is I would really like a pullback here in order for us to get in. But their earnings is coming up next month, and we have yet to see what's going on. Investors may be overly bullish just on some news or technicality. Okay, and so let's see what the intrinsic valuation brings for this business tomorrow. Because I feel like it's tough, man. It's tough to invest in a business like this right now when it's barely recovering, right? Especially from a trading standpoint, I wouldn't touch this with a 10-feet pole, right? I just don't think that the situation is going to improve drastically in such a short period of time. Even buying leaps on this business right now may be a good idea, but I would like the price to be cheaper, right? So tomorrow will be the telltale sign on whether we should enter Starbucks, in my opinion. And I'll do a bit more analysis on Starbucks to bring to you guys more information here. What I was reading about down here was their liquidity, and there we go. So their financial liquidity, they have cash and investments totaling about 4.4 billion. So they do have quite a bit of like bullets or ammo, you can say, right? And they actively manage cash and investments in order to internally fund operational needs, and make scheduled interest and principal payments on the borrowing, make acquisitions, and return cash to shareholders through common stock cash dividend payments and share repurchases. They have a bunch of liquid available for sale securities, including corporate debt securities and government treasury securities, which are all pretty much like money markets instruments, right? And approximately 1.7 billion in cash held in foreign subsidiaries. Also, they have a 2 billion unsecured 5-year revolving credit facility which they can use. It's like a letter of credit you can get from a bank, right? And which they can use 150 million for issuance of letters of credit, and it's set to mature in 2022. And then they also have another one, which is a $1 billion unsecured 364-day credit facility, which they can't use for a letter of credit, but they can use for other agreements relating for an additional 500 million. So quite a bit of liquidity here for the company. Therefore, I see them coming out of this in a positive manner. But I still definitely want to do the intrinsic valuation to see, what this business is actually worth right now. And that's really going to add to my analysis of this business. So as I find out more information, you'll get it. And Starbucks for now is a hold, like it's a pause. I wouldn't buy anything. I wouldn't sell anything. It's one of those things I would just hold off investing into right now. Can't stop those pumpkin spice lovers. That is so true, man. That is so true. I do like that. By the way, thank you once again, man, for that donation. Really appreciate that. Whoever who did that helped me. I really appreciate you. Thank you. Very, very kind of you. I guess that covers my venti coffee for the weekend. Remember, guys, if you do want to donate to this channel, you can, but it's not required. It's a free channel, and it'll always be free for anybody who wants to be here. So thank you for tuning in. I appreciate that. I got 4 contracts, $90 calls expiring this Friday. Thoughts on rolling these out? Yeah, I would definitely roll them out. I don't see it getting there. Cons, okay, and then Facebook 312 call for 925. I know the expiry is close, probably too close, but I'm only down 8%. I'm thinking I might, yeah, you should abort. I mean, it's going to be down much more today at market open. You just haven't seen it. It's 8% now, but the market opens, it's going to be down significantly more, right? So be careful there. So we'll see what happens today, guys. Personally, as I said, I think I intend to sit out today. Doesn't feel like I'm in the sync with the market. I know where we're at, but I personally want to see if we can make a nice bounce. And if we do have 2 consecutive higher, low situations, then I'll jump in and take some more long positions. But as of right now, I'm going to be sitting tight. I actually do have quite a bit of work to do for my master's program. My finals are coming up this week and next week, so I want to make sure that I'm doing some studying, get that done out of the way. It is the end of the quarter for me, for my first quarter in my final in my master's program. So I'm trying to get some studying done in between this trading. And feel free to come keep me company in educational chat for people who are from option swing. You know where to find me. I'll be here answering your questions all day in educational chat here, which is my baby. And for people who don't know about option swing, if you're here and you don't know about option swing, just know that we are a community of online traders. We kind of have a really tight-knit community here that's really has a lot of resources for you. If you've never seen what it looks like on the inside, let me show you. We have pretty much a trading floor where everybody's some people call out trades, some people, basically if anything's happening, we really know about it first here. It's really just being a part of a family, to be honest. We have, traders who call out trades here for pretty much, who are really great at what they do. And then we have a daily watch list that we post out. For example, here's today's watch list. Here's a little bit of a sneaky peek for you guys. If my computer wants to cooperate and load. Oh, I think I know what the issue is. It's probably because it's on low performance. Come on. There we go. I knew it. There we go. So today is 9/8, and here today not much on the watch list here because probably it's pretty much a crazy day. So Apple, AMD, Boeing, Facebook, Microsoft, Neo, and Nikola, those are going to be the ones on the watch list today, and we have all those little levels. These are the watch list entry box that tell you when something's hit a certain part. ER watch list that we put together every day. We have a technical analysis channel that shows you all the members' picks and their technical analysis. Things that people post here, a whole bunch of things. Earnings reports that we put out on a weekly basis. We have 5 reports every week, and these are crazy earnings reports. Like some of them are done like really nicely. Okay, like look at this stuff. I'm saying really professional grade earnings reports where we give you the breakdown. And Option Sync puts it out on his Instagram too. So, stock bots that give you, unusual flow activity, show you things that big boys are doing possibly. There's a whole bunch of stuff here. So we see the flow coming in live. We have information from option chains that we pay premium price for and get this info. And then, of course, the educational chat, right? The educational chat's my baby. I take care of the educational chat. And this is where I am majority of the day. Not to mention the EGA mentorship course, where the mentees and me discuss trade ideas sometimes, and we will be doing a live session on Thursday. By the way, guys, do watch out for my announcement this week on today, sometime today in the night. I'll be putting out the announcement for the intermediate course, which starts this coming next week. Okay, so the signups are going to be this Saturday. We'll be doing an intermediate course on advanced options trading, and the course will start on the 14th of September through 18th September. They're fully recorded courses. You can take them at your own time if you choose not to attend the classes live, but if you do, we do them on Zoom. They're going to be excellent classes that will teach you more about spreads, a bunch of other things, the wheel cycle, how to roll out options, how to mitigate risk in your portfolio, straddles and strangles, condors, and so much more. And I can tell you, people who have taken the intermediate course loved it. They absolutely loved it. So we're doing another wave just for the people who have been asking for it. So watch out for my post on Instagram later today, and that will be something that you should definitely keep in mind if you want to join. How far do you think I should roll them out? 1 month or 3 months? I would do about a month out. Good luck on your finals. Thank you very much, guys. Thank you. I appreciate it. Apple 118 calls 911. Would you cut today at open or write it off for a bit? Personally, I would write it off for a bit, just because you have a 911. Oh, wait a minute. Oh, you said 911. Well, you should aim to cut it by tomorrow. That's what I would do. Cut it by tomorrow. You have to cut it by tomorrow if you don't want to lose too much. Thanks for the reassurance on my long-term view with SoftBank shares. Yeah, I like the company long-term. I think they have a high risk, high reward kind of a structure. So that's the perspective I'm coming from. I would hedge it with, you buy SoftBank and then you buy some other safe investments. Put it together, kind of offset your beta. You're gonna kill your final. Speaking of earnings, though, thank you very much for that. Would it still be wise to make a play on Piton going to earnings, or is the market bet that? Yeah, see, that's the issue, right? Funny thing is, I was bullish on all these earnings, right? I said it too on last week's live stream. I was like, Piton, Zscaler, and what was the other one? Work, right? I was bullish on all three of them, but then now it's like, with this market momentum, do you really want to play this? Because you don't know how it's going to be, right? So you can see SPY selling off again here. It's going to affect everything, right? If you have a company with good earnings, right, and then the market selling off, it's probably going to be muted. That's the issue. So Work also was another one that I really liked. Slack, right? Slack Technologies, but see what happens is you just get a sell off like that. It goes crazy, right? Even Zscaler, right? This was another one that I liked. Really great pockets for technical analysis here. It was in a nice little uptrend, and now everything's just suddenly invalidated, right? It's all invalidated. So our risk to reward ratio setup got destroyed, right? So yeah, I mean, I see where, you see, Jason, the thing is yeah, I'm bullish, but you see what happens is when the market sells off like this, it brings down all expectations for earnings too. So I wouldn't play the earnings, just me being me. That's all. Well, guys, I hope that you guys enjoyed the stream today. I try to keep it brief and keep it interesting as possible. Come back tomorrow for SBUX. We'll do a fundamental valuation tomorrow. That's what I'll be looking to do tomorrow on tomorrow's stream. So we are about 5 minutes from the open here. I'll be looking to manage some of my positions at the open. Come keep me company on the educational chat if you are free doing nothing. I'm going to be probably just answering questions here while I do my work, reading a book for school, and kind of doing multiple things at the same time. So that'll be what I'll be doing. Do you think NVIDIA can ever go up to 550 back again by before December? I do think so. I think so. Yeah, absolutely. In fact, I really like the prospect of buying Nvidia, to be honest. But this would be a sick level to buy it. 430 seems like about right. So 430 is the price that I would buy Nvidia here. Let me show you right here. Right? Why? There's kind of a dual zone here, and you can see it. So this would be the period where I would take Nvidia and buy Nvidia. Apart from that, not really looking to open anything today. Not puts and not calls just yet. Once I get a confirmation, then yep. Remember what to watch out for over here. You're watching out for 2 consecutive upward waves on QQQ on a 10-minute or a 15-minute chart. It's crazy how accurate these things that I drew out were. And then now, obviously, we're opening up way down here, so got completely wrecked with our forecast here. But look at how crazy that was. Drew those last week, and they came true the day after. But as I said, now we're down here. We're gonna have to be cautious here, see what happens if we fall further. What we're gonna be looking for is gonna be something like 2 consecutive waves of higher highs. And somewhere around here is when you will get your entry for a long position. All right. So look for those 2 consecutive highs and higher lows. And that should give you your entry for a reversal here. What would be really great is if we can break out of this little zone here, right? 287.50 seems to be a key level for a breakout here. So the key level to watch would be 287.50. I want to say this level right here. So breakout above here with 2 consecutive highs, that's a bullish reversal, and you could take your position starting from there. Okay, with QQQ. Alrighty then. Thank you guys. Appreciate the 117 likes. I really do. Have a great day. Happy trading. Days like this, it's okay to not trade. Remember that. You know, if you're feeling out of sync of the market, it happens sometimes. It's not like you can always know what's going on. So it's always better to just lick your wounds, reset, and take another day as it comes. Okay? Peace out, guys. Have a good day, and I'll see you guys tomorrow for the live stream. Have a good one. Bye.